Welcome to your daily stock market summary from MarketSnap. What a day, folks. We are smack dab in the middle of a historic week, and the market is trying to figure out which way is up. We've got a new Fed chair, a tentative peace deal with Iran, and a stock market that's acting like it just chugged 3 espressos. Let's break it all down for the long-term playbook. So, let's start with the big picture. After Monday's absolute rocket ship of a rally, the major indices took a bit of a breather today. The Dow Jones Industrial Average actually managed to eke out a gain, closing up about 0.6% and hitting a fresh record high. That's the blue chips for you. But the tech-heavy Nasdaq, it pulled back over 1%, and the S&P 500 slipped about 0.5%. The Russell 2000, the small-cap index, also gave back some ground. It's a classic case of profit-taking after a massive move, but the underlying tone is still bullish. The big story, and the one that's going to dominate headlines for the rest of the week, is the first Federal Open Market Committee meeting under the new Fed chair, Kevin Warsh. The market is not expecting a rate change tomorrow, but all eyes are on the tone. Will Warsh be a hawk? Will he ditch the dot plot? The bond market is already pricing in a couple of potential rate hikes by next year, which is a stark contrast to the equity market's euphoria. This is the tension we're living in. And speaking of euphoria, the real fireworks are in the AI and tech space, but not in the way you'd think. The Magnificent Seven narrative is officially getting old. We're seeing a massive rotation. The big winners today weren't the usual suspects. Look at the large cap gainers. SpaceX, or SPCX, is absolutely on fire. It's up another 5% today, and its market cap has now blown past Amazon. We're talking about a company that just IPO'd last week and is now worth more than one of the most dominant companies on the planet. That's the kind of mania that makes you sit up and pay attention. Also on the leaderboard, you've got financials like JP Morgan and Capital One, and even Western Digital, which is up over 4%. The rally is broadening out. But on the flip side, the large cap losers list is a who's who of the semiconductor world. AMD, Intel, Marvell, KLA, they all got absolutely hammered, dropping between 7% and 10%. This is a clear signal that the easy money in the chip trade might be taking a pause. The market is starting to question the sustainability of the AI capex spending, even if the long-term thesis remains intact. For a long-term investor, this is a rotation, not a collapse. And speaking of rotations, the biggest mover of the day is without a doubt SpaceX. It's not just a stock, it's a cultural event. The options market is already buzzing about a potential gamma squeeze. But for the long-term investor, the question is, does this valuation make sense? The company is still losing money, but it's building the infrastructure for the next century. It's a high-risk, high-reward bet that you have to size appropriately. Zooming out to the weekly performance, the rotation is even clearer. The top weekly gainers are names like Robinhood, Royal Caribbean, and Block. These are consumer-facing, cyclical names that are benefiting from the peace dividend of lower oil prices and a potential end to the Iran conflict. The market is betting that the consumer is going to start spending again. On the other end of the spectrum, the weekly losers are a mixed bag. Fox Corporation is down big after a deal, and Adobe and Autodesk are also on the list. This tells you that the market is very selective. It's not a rising tide lifting all boats. It's a very specific rotation out of last year's winners and into the potential winners of the next cycle. Looking at the sectors, the story is the same. Basic materials is the top performing sector for the week, up over 5%. That's a classic reflation trade. Technology is still positive, but barely. And energy, it's the worst performing sector, down over 2% for the week, as oil prices have tumbled on the Iran deal. If you're a long-term investor, you want to be paying attention to where the money is flowing, not where it's been. Now let's look ahead. The earnings calendar this week is packed with some interesting names. We've got Jabil reporting tomorrow, and later in the week, we have Kroger, Accenture, and CarMax. These are bellwethers for the consumer and the broader economy. The whispers are that earnings are holding up surprisingly well, which is a key reason why the market is resilient despite the rate hike fears. You can find exclusive earnings transcript summaries on MarketSnap to get the full picture on any of these names. And finally, a quick note on the macro backdrop. The tentative U.S.-Iran deal is the biggest catalyst this week. Oil prices have fallen below $80 a barrel for the first time since the conflict began. That's a massive tailwind for the consumer and for corporate margins. But the bond market is still worried about inflation. The 10-year Treasury yield is hovering around 4.45%. The market is pricing in a soft landing scenario, but the Fed under Warsh is clearly signaling that they are not done fighting inflation. This is the tug-of-war that will define the next 6 months. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. It's a wild week, but the key is to stay disciplined, keep your eyes on the long-term trends, and not get caught up in the daily noise. Make sure to check out our SWOT analyses on the stocks we discussed today to build your conviction. We'll see you tomorrow.